There are many reasons to think the Bitcoin bull market will continue to go upwards, but just because you're in a bull market doesn't mean that you're guaranteed to make money. For example, if you look at a bear market trend such as this red area, you can see that price actually does go up. And when price goes up in a bear market, people are anticipating it's just going to go down. But when you're in a bull market, the opposite can happen. Price can come down and you can lose an absolute bucket of money. What is the solution to this problem? With financial markets, you'll find that you can be absolutely right in your thought and lose money because of the timing. And a big part of that is about Rule 4. Price is always moving in waves. When it goes up, it doesn't go up in a straight line. It goes up and down. And when you're in a downtrend, it just doesn't come straight down. It goes up and down as well. So timing is absolutely critical. But there's something underneath that I really want to help you with. To do that, I'd like to share another rule with you. Rule 289. Price waves are structurally bound. Now, what the heck does this mean? And can we prove it out in real time? Let's look specifically into Bitcoin, which is currently $121,413. When we look at this price moving in a wave, it's moving up and down. Now, it's moving up and down between and around structure. But how can we prove that? Well, what we do, the thing to understand is, what is structure? Structure is literally two levels of standard certification that draws these particular dotted lines. These lines are the most powerful support and resistance levels in existence. Now, what does it actually mean? Remember, going back to that rule, that price moves in a wave and price is structurally bound. This is a structural binding and this is a structural binding on Bitcoin. Now, don't forget, this is playing out in real time. This is not cherry picked. I've not gone on and hit replay and just picked a great area of price. We don't do that here. We are just absolutely addicted to reality. Now, why? Why are we addicted to reality? Well, we need to be, because price is the only reality. If we're addicted to our fantasy, we're going to be in a lot of trouble, because our fantasies would be price is going in the direction that I want. If I'm going long, it's going up. If I'm going short, it's going down to zero. Okay, let's make this real. So we can see right up here, right at this point, around that 123,920 level, all of this overhead structural resistance. Now, what happened when Bitcoin got up to that resistance? We put in structural failures. Now, what do these lines actually mean? They mean when price is coming into them and up into them like this, they're called resistance levels. And resistance is something that slows something down. And when you're looking inside a chart, resistance means sellers. What about this stuff down here? What about these lines? Well, these lines are support lines. Now, why are they called support? Well, if you got support, you would anticipate that you can do a bit of a rebound. And that's what support is all about. So we can already see the hidden architecture of Bitcoin. 123,900 is a very key level to continue bullish momentum. Now, a lot of people will talk about a lot of different forecasts for Bitcoin. If Bitcoin doesn't get above 123,900, Bitcoin is not going up. Well, that's a bit of a bummer, Ken. I don't want to hear that. I want to hear that Bitcoin is going to $1 million. Okay, Bitcoin's going to $1 million, but when? I told you that, but when is it going to go to $1 million? And is it actually going to go? Is that a fantasy as well? We have to look at structure. Now, when you see this 121,500 and the 121,200 level, we found support in that area. Right back here, we did a big bounce up to that 123,700. We did a structural failure, weakening trend, immediate target back to the 121,200 level. and it just overshot. And that's what you'll find. If you have a negative CTKS gap, you can get overshooting, especially if it's hit it before. That's another thing that you want to just bear in mind. Now, what's happening with price action right here, right now? We are trying to get above 121,500. If we do so, we've already targeted the 123,700 level, because that is how good structure is. Reading and interpreting structure is something that will take a little while to do. When price is just getting over a resistance into one of these gaps, this gap is called a CTKS gap. Now, is it a positive gap or a negative gap? If price gets above that 121,500 level, this is a CTKS gap, which is a positive gap or a positive CTKS gap. Now, if it manages to do that, we immediately target the 123,700. Targeting is a really important focus that you should have a look into, and with structure, it makes it really, really easy. For example, when we were doing a structural failure right here, back in price action, that immediately targeted down to this 121,200 level. Now, it did take time to get down there, but that's not the point. The point is, when you get a structural failure, if it can't repair in terms of price action, you already have a target, and that is incredibly powerful. To take the enormous amounts of stress out of trading and investing, it's a really good idea to have your own rules, or just get the rules of people who have been inside financial markets for a long time. Rule number 4, we know the price moves in waves. It's not a straight line like this, it's not a straight line like that. It's always up and down, hills and valleys. With rule 289, we know that those price waves are structurally bound. We saw it on Bitcoin. We saw those two levels of primary structure, the gap in between and the targeting that we looked at. Which brings us to an even more important rule, rule 268. CTKS structure actually determines those price waves. When you understand this, it's an absolute game changer. For example, inside Bitcoin structure, you saw two levels of structure, one a resistance level, one a support level. This is causing Bitcoin to move between them. This means something absolutely so incredibly cool. It's a game changer. For example, if we were looking at Bitcoin just without CTKS structure, we wouldn't know where the core resistance levels were and the core support levels. We wouldn't know the exact location. We wouldn't understand, is this significant price right at the current time? We would just say, it's just price moving in a wave, but we wouldn't know where the boundaries of that wave were actually placed. We already know that if we can confirm above 121,500, we immediately target the 123,700. Now, that doesn't mean it's going to go up there within 1 second, and that's what most people believe. It just does, unfortunately, take time for price to come up, and it takes time for price to come down. A lot of people seek to buy at the bottom. Now, how can you buy at the bottom if you don't know where the structure is? But that structure doesn't work because it went lower. Remember, we tested here, we came down again, we structurally failed, we overshot, we came back into this what's called a gravitational well. Now, why is all this important? And how do you actually get these lines on the chart? Because you can do it yourself. To draw those CTKS lines, those dotted lines, on any price chart, we need to go through the theory of level 1 and level 2 standard certification. It does take time to do level 1 and level 2, but what it means is that you can mark up any price chart. And you can also interpret structural levels on a monthly basis. Now, why would we need to do this? It's very much to do with the 4-step process that is the CTKS method. First of all, through Level 1 and Level 2 standard certification, we draw up the CTKS levels on the price chart that we're looking at. Then we use that structure to create bullish, bearish, and consolidation patterns for the month under analysis. Now, this is really important. For example, if you figure out or you believe Bitcoin is going really positive, and it does, but then it starts to reverse course, it's because it's hit structure that it cannot overcome. And that structure should be in your price path. I talk about CTKS paths in Level 2 standard certification. Then we want to have some forecasting model, some long view forecast model to understand where price can go over the longer term. But just think about it like this. If month by month it can't break to new highs or it can't go up, that puts either the consolidation case or a bearish case on the cards. And that means you don't have to worry. Unfortunately, investors are taught that they can only make money if price goes up. Well, you can make money if you buy at structure and you understand where the structure is. Buying and selling between structural levels is wildly profitable. But then the fourth part is to understand the cheat sheet. We need to read across markets. The Forex market influences the crypto market. The stock market influences the crypto market. Commodities such as gold and silver and copper and oil, they all impact the crypto market. All the markets move as one. And when they're moving together as one, we better know what direction they're moving in. That's called intercorrelation. Now it's a good time to think about how you typically get your signals from price action, from the markets. You might have looked at Bitcoin without structure and said, I have no idea why price is moving like this. And with structure, it's completely different. It's an absolute game changer. At least you know where the high levels of support are and the high levels of resistance are as well. If you get structural passes, you can do structural targeting to the upside and also to the downside. Remember, things take time to play out inside the market. Sometimes they'll move quickly, sometimes they'll move slowly, but structure is everything. Now, a lot of people will look to the news and say, what happened to price action? Why did it do this? It's structure. Pure and simple. It's structure. So what do news articles just talk about? They'll try to invent a reason that structure failed here, for example, or failed here. For professional traders and investors, we don't give two hoots why something would fail. We only observe that it does. If it does, we've got immediate structural targets to the underside. If it passes, immediate structural targets to the upside. Now, why don't we care? Shouldn't we care? Everybody else cares. Why shouldn't we care? Just think about the statistics. 90% of people lose money inside financial markets. Why do you think that is? If everybody cares what the reason is and the price is telling you the truth at every single stage, every second, price is telling you, hey, guess what? I'm doing this. And people say, no, you're not, price. I don't believe you. And price is saying, but this is what you're buying and selling. Please listen to me, says price. And we all say, no, we don't listen to you, price. We want to get our source of what you do from the news because the news knows. The news only, price responds. The news only knows what I do after I do it. Wouldn't you prefer to know why I'm doing it? That is structure. This is the fundamental question that you have to answer as a trader or investor. Do you embrace price reality or do you embrace stories? Stories are beautiful when we're kids, especially the good stories. But listening to stories about your money that don't take into what reality is currently doing will leave you inconsistent losses. It's just a very unfortunate thing. Another rule which will really help you out is Rule 22. Price reflects reality. What Bitcoin is doing now is happening for a million different reasons. The news stories will say, no, it's only 2 or 3 reasons. In fact, it's millions of reasons. And literally, the top end of town will not telegraph their interests and positions to the mainstream media until after they have positioned themselves. So the news is always lagging. It's fun to read, it's good to read, but it's always lagging. It will take a little bit of time, but when you get used to looking at price like this from a structural perspective, it is an absolute game changer. Everything will change for you. And always remember, structure helps you with your timing. If you're in a bull market and you find the price is weakening, structure provides support underneath and turning points inside price action. If we're going on a really bending rally, we'll find the structure will hold price back. And we've seen this time and time again. Longtime viewers of this channel know that as price was rallying up to here, I said it's going to have a problem because there's so much damn structure there, it is likely to consolidate. And that is exactly what happened after that. But people were just anticipating this thing is going to go forever up to the moon, and it did exactly the opposite thing. And it really bled people down. It really matters. Structure is the most important thing that you can look at. So when we look at the Bitcoin CTKS model, this is a structurally bound model underneath, and there's levels of structure that I discussed in that Bitcoin price estimate video, and some areas of structure that is so important for you to understand. You might like to go back and just check that video out. It's really helpful. I'm going to do a deep dive inside this month's service video, which will be out in the next 24 hours. This is just for the service members on CTKSmethod.org. And if you're a member there, it is going to be a very, very important video. And if you're not a member, just consider just joining up for a month. It will definitely be worth it. There are literally tectonic shifts that are occurring inside the crypto market, and no greater shifts are occurring than inside ETH at the current time. Remember, a bear market doesn't just go down in a straight line, it goes up and down, and there are some huge rallies here. You have to be careful how you do things, but you can make an absolute mint. And inside consolidation, it is generally just pure recovery after capitulation. You're going to find these particular zones are the ones you need to get into. The masses will get pulled back when the next halving occurs, and they'll probably find price action to be flat or potentially negative. Understanding structure just reveals so many things. I'll be talking about this a lot more inside this month's service video. Have a great day or night ahead, my friends. And what do you think Bitcoin is going to do? Do you think we're going to get an elongated cycle, a stronger cycle, a recovery up? What kind of targets do you give it? We're going to do a deep dive inside the service on those issues. And you might even like to pop in the comments what your target on Bitcoin is for this cycle. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.